And China raising $48 billion in funding for a new chip fund as it looks to ramp up competition with the United States. Eunice Yoon joins us right now from Beijing. And Eunice, this is a big issue. Semiconductors are kind of looked at as the new arms race, the weapons in the new arms race.
Absolutely. Chips were on the mind of Chinese Premier Li Qiang, as well as the rest of the leadership, but he specifically was urging Samsung, a major chip player, to invest in China. This is as the Chinese look to maintain a connection with global semiconductor supply chains. Now, he was meeting with the leaders of Japan as well as South Korea in Seoul this weekend in a meeting that was deemed the first three-way talks in 4 years. Now, he called for an end to protectionism as well as a decoupling of supply chains. Now, this visit comes also as Treasury Secretary Janet Yellen urged the G7 to create a united front against Chinese overcapacity. The G7 finance chiefs in the meeting expressed concerns about China's, quote, non-market policies. Now, highlighting that, China announced an expansion to its main government-backed fund that supports the chip industry. This is called the National Integrated Circuit Industry Investment Fund, known as the Big Fund. Now, the authorities in China are planning another $48 billion investment. This would roughly double the size of the fund. Now, it's also important to note that in the meeting, the trilateral meeting with two of the most powerful leaders in the region, President Xi Jinping did not show up. And only a week ago, he had met with the president of Russia, Vladimir Putin, in a sign of changing priorities when it comes to foreign policy for Beijing. Guys?
Hey, Eunice, China's been working at this for a while. They had billions of dollars, tens of billions of dollars that they'd spent in the decade leading up to this. And as recently as last summer, I remember reading stories about how frustrated they were that those tens of billions of dollars in investments weren't paying off in the way that they had anticipated in terms of new developments in semiconductors. Why would this be different?
Yeah, absolutely. Yeah, well, absolutely. There have been several people within the chip industry who've told me that the Chinese are very far behind when it comes to chips. And so because of that, there is a frustration at the idea of being able to create a self-reliant chip industry, but not actually quite making it. It's a big question mark as to whether or not this extra $48 billion would really make much of a difference in terms of the size. It's huge, but it's difficult to say just how effective it is. And in terms of the announcement, there wasn't a whole lot of detail in the investment plan other than other government authorities such as Shanghai or Shenzhen putting in.
It's a little interesting to hear the Chinese preaching about decoupling the supply chain, because when the United States has brought that up, it's been a really big sore point.
Right. So the U.S. often will say that the Chinese had started the decoupling long ago, especially when it comes to, say, for example, the Internet, that Facebook or Twitter or X aren't allowed here anymore or at any time. But at the same time, the Chinese perspective has always been that the U.S. is the one that had started this decoupling. And so all of the state media reaction, especially from Treasury Secretary Yellen's comments about Chinese overcapacity, has been just to really push back on the idea that the Chinese are in the wrong here.